Well, we're back with you here on a Monday morning. I'm Marlin Bohling with you, and so glad you could join us today as we get the final two trading sessions of August underway, and there could be a lot of interesting stuff going on. Anytime you get into first notice day coming up tomorrow on any contracts, in this case it'd be September, also the end of the month, you can have some, well, position squaring, book squaring, window dressing, you name it. And here to talk about it, we have Chris Swift with us today in studio. He's with Swift Trading Incorporated. Swift Trading in Nashville. I always say Incorporated. I'm sorry about that.
That's all right.
Let's talk about this. How much impact does that have when you get into the end of the month and first notice day delivery is coming up tomorrow? Mm-hmm. How much impact can that have? Because September, well, for example, soybeans, they've had some really goofy moves here in the last few hours.
They have, and it can be a lot. A lot of times what we're doing is just looking, like you said, position squaring before that, and a lot of the long positions don't really want to go through the delivery process, but to some extent there could be always some profits to be made there when you're looking at someone needing to get out versus somebody wanting to get out.
So let's look at our prices right now. We'll start with the corn market and get everybody updated. And along the line here, I want to mention some overnight export news too. On the corn right now, boy, we're really starting to take it in the shorts. We have the December corn currently down 11.25 cents now at 542.5. Look, the wheels are starting to come off here, Chris. We're just one tick from our low of the day. Let's look at soybeans and see what they're doing. They started out about, I think, a penny higher. They fell out of bed. Then they rallied about, 2 or 3 cents, and then they fell out of bed again. Here's what I'm talking about. September, down 46.25. That goes into delivery tomorrow. Wow, 46.25. November is down 18 cents now at 13.05.25 after a high last night of 13.36.25. And on top of that, we had an overnight export sale to talk about. It was a sale to China, and it was a little over 250,000 tons this morning. And here, once again, the market goes the other way. It seems to be habit forming for whatever reason this year. So now a lot of pressure there. Also, Chris, you and I were talking over the weekend, and you were talking about a map that caught your curiosity, and it's related to where the soybeans are grown.
Right.
And with Hurricane Ida coming on shore from the Delta and everything, I believe you were kind of concerned about potential for maybe damaging some soybeans. I believe we have a map here of where the soybeans are mainly grown. And it's very intriguing because there's a hot spot right along the Mississippi Valley, as you can see on the map. It goes all the way down there into Louisiana. Now, if you put that track of that hurricane and where it's supposed to go back on the screen here, we'll see how it's a very similar map, although it looks like on the hurricane tracking map, it has maybe shifted a little further east. Now, at one point, it looked like it was going to go right over the Mississippi Valley. Now it looks like it's going to veer away from it. Do you think that's part of the pressure on the soybeans this morning?
I think it is. Last night we noticed a little bit higher opening, and then we've heard that some of the barges have broken loose in there. So right along the mouth of the area is probably where the most damage is. But it looked for a while like it was just going to creep right up the Mississippi River, and we know that a lot of those beans are grown in bottomlands, so that would, increase the flooding aspect to that. But since it's moved to the east and we see the market are down, they are apparently looking at something beyond today.
That's a good point. Let's take a look at the wheat. What's the wheat doing in Chicago? Well, it's just kind of, that's a terrible pun, but it's treading water. December up 0.5 cents at 7.33 per bushel. We have the Kansas City wheat here this morning, now showing December a penny higher at 7.25. It's been on both sides of unchanged. And on the Minneapolis wheat market, we currently have December a penny and a quarter lower at 9.16.5, but oddly enough, the deferreds are higher here. And a lot of folks wondering what cotton was going to do today. Some thought it would be a big surge. Well, that's not the case either. December down 113 points now at 93.71 cents per pound, as they are now taking the weather premium back out of the cotton market the way it appears, at least at the moment. We'll come back in just a little bit. We'll take a look at our livestock trades with Chris Swift right after this. Well, now let's take a look at how we're trading in livestock. Let's go to live cattle and our quotes provided by Bar Chart here. Quite a bit of weakness. October currently down 67 cents at 128.45 on the feeder cattle side of things. We now have September down 20 cents, October down 30 cents, Chris. We're at 168.12. after an opening high of 169.55. That's quite a turnaround there right after the opening bell. On the lean hogs, we now have the October 72 cents lower right at $90 even, and December 32 lower at 82.72. So what does this all mean here with things kind of turning around and hitting the skids right after you have the open on the cattle?
Yeah, last week was very interesting in the cattle market alone, simply because we had the big increase in open interest. So we viewed that as a large transfer of risk. Who was the ones buying that many contracts and who were the ones selling that many contracts? And clearly it kind of looks at the ability of those sellers. Producers are the ones large enough to make that kind of sales, and the commodity funds, the ones big enough to handle that kind of selling pressure. And so interestingly that it came on a gap up, a large up day, and we haven't seen a new high since then. So it's interesting, kind of like almost a big transfer of risk at the top of the market right now.
So on the livestock summary that we had from Friday, we saw where we had live cattle trade on a cash basis, or the cash live cattle were 122 123. Do you think that's about it now?
It kind of looks that way. It's been that way for probably close to 8 weeks now. We haven't seen much between 118 and over 123, and the number of cattle on feed seems to be adequate. We're not losing any weights by any means, so the carcass weights are remaining high. And I think where the big question is where the consumer is. The consumer is being bombarded with a lot of new health issues that we see on television every night, and we're just not real sure how they are going to continue to compensate for all of the increased expenses that they're having to deal with over and above a good steak.
Interesting perspective. Well, thanks for coming in.
Absolutely,
and talking with
always
us. Appreciate that. I always enjoy that a lot. Chris Swift of Swift Trading. We'll look at our livestock trade as well here this morning. Janet, I'll turn it back to you.